Hello, traders. This is your trader's friend. Thank you for joining me today for another video. I am so glad you're here with me. Guys, I hope that you have had a very profitable week and that your pockets are full of paper from all of the pips that you've made. Today I am looking at the Aussie USD because I'm considering trading it because of a friend on Facebook. And I saw some things that caused me to make this video this morning. I know that in past videos I've told you to watch out for the way your moving averages are forming. Yes, they are lagging indicators. However, along with price movement, they give you some very good entry signals. Let's take a look at this. I was looking at this situation this morning, and this is my 10, my 20, my 200, and my 50. Now, first thing I noted was that my 20 is beginning to undergird price. Right away my mind said that's not right, because your smaller moving averages should be closer to price. If you are considering entering a trade and your mind says there's something out of whack with that trade, you may want to wait to see if that trade is going to work out. Now, another thing I want to mention before I forget, because another friend on Facebook was asking me about an entry on the 10, in on the 10, out on the 10. The in on the 10, out on the 10 was something that worked out great this morning. If you were looking to scalp, once you hit what I consider the mother lode, that trade, you get it about twice a day, but it's that trade that you enter and you just ride into sweet pip heaven. Once you hit that trade, everything after that is pretty much going to be choppy. It's going to be a market for scalpers. And this was an in on the 10, out on the 10. Great example of that. But let's continue to progress in this chart. And you can see pretty soon thereafter, you got this bearish signal with this bearish confirmation. I did not enter this to the short side. I'll tell you why. Because my 50 is too far down. Had my 50 been right about here, oh, I would have been all over that trade because the setup would have been right. However, none of these moving averages are making sense. So as I saw this forming, what I thought is chances are price is going to come down and visit this previous support level here before bouncing back off. And you can see as we continue to progress. Another thing I didn't like, and I don't particularly care for, if you get a strong break below the moving averages and then you have a strong reversal soon after. But you do not want to get out of a trade until or unless price visits above this previous candle. If price visits above the candle before the candle you enter in, chances are it's a trap and the trade is going to go against you. But let's continue here. And you can see as we progress, the moving averages still aren't making sense. Still not making sense. We get down, and exactly what I thought was going to happen did happen. We came down, visited that support, got a bounce off that support level, and we began to go back to the upside. Guys, if you enter a trade and pretty soon thereafter you see price reverse like that, it's a trap. It's a trap. Make sure you're saving yourself and you're watching what price action is doing. You come back here. Now I thought that perhaps this trade was going to work out because remember, I'm watching this form live. The moving averages are wacky, yes. However, we began to get a good price run. Price was far outrunning the moving average, and I was starting to feel good about this trade because I noted that you had a situation. Now the 10 was already following price, somewhere thereabout, but you had a cluster of your 20, your 50, and your 200. They were right there together in a kiss. And I knew that chances are they were going to come out and be in the proper order. But And they did do that, so I'm starting to feel good about this trade. But if you get into a situation where your moving averages are starting to line up, and I'll show you what I mean. If they're even vertically like this, if they start being even, chances are price is going to reverse on you and go the other way. And that's when I began to lose faith in this trade. That's when I added this additional short-term support level. If you have a situation where your moving averages are starting to come together, go ahead and put your stop loss, and it's a good idea always to move your stop loss anyway, above that previous support level, because you'll see as we progressed, that's exactly what happened. Price came above that previous level to reverse on you. Guys, you can absolutely do this. You can be successful at Forex. This is not rocket science. Some things that you want to keep in mind is pay attention to the way your moving averages are forming to see whether or not it's going to be a good trade for you. If you enter a trade and pretty soon thereafter price starts reversing on you, it's a trap. Get out. The other thing is, if your moving averages start lining up together, where they're coming together, where they're even like this, then chances are price is going to reverse on you. You want price to be far ahead of your moving averages for a while before your moving averages start coming together. Guys, you can absolutely do this. You can be successful at Forex. Have a terrific trading weekend.